If you are looking for a strategy that helps you grow your wealth and generate passive income, then dividend investing might be the perfect fit for you. Hello and welcome back to the channel. In today's video, we are diving into the world of dividend investing. Let's explore the power of dividend investing and how it can help you achieve your financial goal. And this is not something which is only for you. It is something which you can even pass to your next generation. Whenever we talk about inheritance, I think the first thing which comes to our mind is property, and which is definitely a good option. But this is something which can provide a steady income to your next generation even without doing anything. Even no maintenance is required. I'll make a separate video by comparing these two assets class which you can pass to your next generation. So please consider subscribing this channel so you'll not miss out that video. Now let's come back to the dividend investing. Okay, so first we have to understand what are dividends. Dividends are the portion of company's profit that are distributed to its shareholders. When you invest in a dividend paying stock, you become entitled to a share of that profit typically paid out on a regular basis. It's like getting paid for simply owning the share in the company. What are some benefits of dividend investing? Firstly, it provides a consistent stream of passive income which can supplement your regular earnings and help you achieve financial independence. Second, dividend paying stocks often come from the stable and established companies with a track record of profitability and strong cash flow. This can add an element of stability to your investment portfolio. So that means not only your stock is providing you a dividend in terms of a regular income, the stock price might itself will grow over the time. And what it means for you is you are creating an asset which is self-appreciating. One of the most powerful aspects of the dividend investing is option to reinvest your dividends. You can compound your returns over the time by reinvesting your dividends into additional shares of same company or either other dividend paying stocks. This means your investing capital can grow exponentially and thanks to the power of compounding. Let's understand the another aspect, which is dividend growth and yield. So dividend growth refers to the increase in dividend payments over the time, which indicates the company's financial strength and commitment to the shareholders. Dividend yield, on the other hand, is the annual dividend payment divided by the stock's current price, representing the percentage return of your investment. You can treat it like in fixed deposits, you have a fixed deposit interest. Here it is something which is variable and can increase and decrease depending on the company's performance. Let's see some important aspects. When constructing a dividend portfolio, it is important to diversify across different sectors and industries. Look for the companies with the history of consistent dividend payments, strong financials, and a sustainable payout ratio. You can choose between individual dividend stocks or invest in the dividend focused exchange traded funds for a broader exposure. If you are new to investing, then I think second option would be better for you, that instead of you picking up or choosing individual stocks, better you find a dividend paying fund and then buy or invest in that fund directly. So by that means you will be in a safer hands, and it will save you some effort in terms of researching, finding out which companies are good, which companies are bad. Now the very important part, risks associated with dividend investments. There are multiple factors, but very common factors are economic downturns, industry specific challenges, and company specific issues, which can impact a company's ability to sustain and grow its dividend. I think the best way is diversification, and that's why it is suggested not to buy only one specific kind of industry, or do not invest all your money in a same sector. By that means you will always be safe. If there is a downturn in one sector or one business, your another stocks or company's performance will not be impacted because of that downturn. So let's understand that, like all other good investment, dividend investing is also a long-term wealth building strategy. Over the time, your dividend payments grow, and you can potentially reach a point where your dividend income exceeds your expenses, providing you a financial freedom and flexibility. Let's understand it by an example, and maybe we can relate it more. So let's look at this example where I am assuming that investor will start at the age of 25, and they will invest for 15 years. The investment is very nominal of 1000 per year in a dividend stock, which is basically a price of £200. So 5 stocks per year, and the dividend is 5% yield. That means that particular stock generate a 5% dividend every year. Okay, now if you look at this example, in this manner, the second year, if the person will invest another 1000, the person will have 10 stocks in the portfolio. The dividend is coming as 100, but since it is an accumulating of previous 15 dividend as well, now the total dividend received is 150. By this example, you can see after 15 years at the age of 40, that person will have a 6,800 dividend income per year without even touching anything. What this means is that the person will hold the stocks which are worth £16,000, and as well as getting every year 6,800 as a dividend without even selling, buying, or doing anything with those stocks. In this example, because of simplicity, I just kept it very easy that dividends are not reinvested in the stocks. If we include the reinvestment of the dividends, this price or this return will be much higher than that. Another factor which I kept constant is this, in this example, is every year we are just getting a dividend of 5%. That can increase or decrease depending on company performance, as I explained earlier. But if it is a strong company and the expectation is the dividend income will increase, again the value of this return will increase hugely. I mean, we are not considering all those factors. The assumption here is even the stock price which I contained remains same for 15 years, which is hardly a case because stock price fluctuate very frequently. Just to make it very simple, what I want to present by this example is you can create a regular income by investing as low as 1000 every year and doing no work extra to gain this kind of return. Let's take an example of some of the stocks which are example. If you look at my screen, I'm taking an example of Target Healthcare RET. This is basically a company which is dealing in the property business and will provide rent to their shareholders. If you look at the price of this particular company, it is traded on £80 last traded price. The dividend yield you can see here, it is 6.9, almost 7% return, which is more than an example which I was presenting to you. Let's take another example of any other stock which is an Central Asia metal stock. If you look at this stock, this price of this stock is 193, which was the last traded price. The dividend yield of this particular stock is 10.32. It is returning almost the double dividend which we have taken in the example. You can see that how the dividend investing can increase and create a side income for you in a longer run. I hope you like this video. Thank you for watching. Cheers.